Hi guys, good afternoon and welcome to the CNBC-TV18 Mumbai newsroom. I'm Pavitra, you're tuned into MF Corner, and today we're going to discuss a very special space. We're going to talk all about value and contra funds today. Now, both of these categories follow quite an unorthodox approach to buying stocks, right? So while contra funds invest in underperforming stocks, value funds, on the other hand, invest in undervalued stocks. So both of these categories, in a sense, have a very against the wind kind of investment style. Some more about these types of funds. Value and contra funds are both actually considered high-risk investments. The risk, of course, is that the fund manager could get the calls wrong, right? That is the key risk that we're working with. And what we've seen in the past few months is that inflows into these categories, into value and contra funds, have been picking up slowly. So the figure is up on your screen. We've gone from just around 120 crores in the month of November, that's 5 months ago, to 700 crores around in December, Jan and Feb. And then if you take a look at the March figure, there's a big jump to 1,044 crores. That figure is reflecting negatively for some reason, but it's a positive figure. So the question now is that, is this something that will hold? Are these funds, good to look at times like this? To discuss all of these and to, take you through the investment strategy here, we have Nirav Karkera joining us. He's head of research at Fisdom, to answer all of your queries on this and to take us through the correct approach to look at this. Nirav, thanks a lot for joining us. This is the first time I'm, speaking to you. So welcome to the show and thank you for being with us today. And my first question is on exactly this, right? We have seen a pickup in this category in the past few months. We've gone to over 1,000 crores in the month of March. Do you think at a time like this, when, on an index level, the market is very range bound and you really have to look for specific pockets, do you think these categories are likely to do better and these kinds of flows could sustain?
Absolutely. So right off the bat, thank you for inviting me, Pavitra. This is the first time even I'm interacting with you. So great to be a part of this show. So talking about the inflows into the category, there is an uptick. There is a trend that's picking up within the category, and this sure is posed for sustaining over a longer period in time. And I say this because of a couple of reasons. As you said, markets right now are slightly choppy. And categories like value and contra actually thrive in such choppy markets, and when the broader equities, go sideways. And this generally happens because most of the choppiness that we're seeing right now in the broader equity segment is attributable to macro headwinds. Okay? And whenever equities as an asset class, or for that matter, any asset class, gets shaken up because of a macro headwind, it opens up a plethora of opportunities, right? So any macro development shakes up an asset class, and that shake up really opens up opportunities. This opportunity could be either for buying or for selling. At this point in time, it is a headwind, so there are buying opportunities that are opening up. Now, the mandates of such funds like value and contra funds offer a fund manager a lot of flexibility to take a certain bet, which even goes against the prevailing momentum, right? So this offers the fund manager the ability to look for really deep value bets, which is now far more easier to do. I'm not saying it is simple and straightforward, but relative to a secular, in a secularly growing market, it is far more simpler to do it right now. There are a host of opportunities. The market is supporting fund managers to buy the stocks that they've always wanted to, but at far more reasonable prices. Even for contrarian fund managers, now is a great time because the shake-up has really led to many high-quality stocks being dumped down and beaten down by broader markets just because the sentiments are not in favor. So now is a great time for these fund managers to start accumulating into these very high quality stocks at great prices. And this is something that investors are realizing. This is something that investors are acknowledging, and that is why they have now started to take exposure in a very meaningful way to value and contra funds. We feel that going ahead, while now may be a season that allows for a lot of focus and spotlight to fall on these funds, this will continue to be a strategic allocation in most retail investors' portfolio for a longer term as well. So yes, the trend will sustain and it will start being a part of strategic allocations for retail investors.
Okay, so this trend that we are seeing of higher inflows could perhaps sustain. Nirav, then what is the case for investing, say, in a contra fund versus a value fund, or a value fund versus a contra fund? Like we were discussing, they're both a little bit of an unorthodox way of picking stocks. But how would you pick which one is correct for you here?
Right, absolutely. So, it is such a beautiful thing that while both of them are used interchangeably, value and contra style are used interchangeably, there are in fact schools of thoughts that suggest that value investing is probably a subset of contrarian investing and vice versa. But there is a very nuanced difference between the two. So whenever one how do you pick one is the answer lies in first understanding the nuanced difference between the two, and then choosing the style that is suitable to you and your portfolio. So when it comes to value investing, you are basically betting on a growth prospect that you believe will materialize, but people are not yet recognizing at this point in time, or the markets are not yet recognizing. Let's say there's a company A that is doing okayish right now, but you feel 5 years down the line it is going to be a segment leader, and you're willing to hold on to it for that long and wait for that value to materialize, that value to unlock. That is that approach is basically implying a value investing sort of an approach. But a contrarian investing approach is basically a subject matter of seasonality. It is about investing in certain stocks slash sectors that are currently beaten down due to a negative sentiment, a risk of sentiment, or something as simple as a distraction. If I have to put it in, much more simpler, relatable terms, I would say, value investing is basically backing that, betting on the backbencher who will perform when the time comes. But till then, he or she is going to be a mischievous kid, but you are willing to bet because in the longer term it will, or he or she will really perform when it matters the most. But when it comes to contra investing, it is somewhat very similar to betting on someone with a great personality when the world is holding a scorecard for popularity, right? So that this whatever the stock is may not be in trend or in vogue at this moment, as most of the people are chasing momentum. Most investors are trying to make quick money in the shorter term. The market is flooded with many traders, speculators, and also short-term investors who invest with very short-term goals. You are willing to wait them out. You are willing to stay put, stay patient for a longer period of time, and that's why you're willing to go against the grain, go against the wind, like you rightly put it, and take that bet. So that is a contrarian style of investing. If I have to make it slightly dramatic, I would say value investing can be best resonated with the song "Papa Kehte Hai Bada Naam Karega," and contrarian investing can better be resonated with "Apna Time Aayega" from the Gully Boy fame. That is the slight nuance difference, and both of them serve very distinct purposes. Many fund managers use a combination of both in their current portfolios. And you must understand that there is a reason why these funds perform over a period in time and why it goes out of favor in the short term. The roots lie in something, as most people from a Gujju traditional household would have heard this phrase, Bhav Bhagwan Che, especially those in the trading and investing community. So which essentially roughly translates into Bhav Bhagwan Hai. Now, bhav here is often referred to as price, which means that price is the eternal truth. This is a metaphor for explaining that, figurative statement for explaining that. But bhav could also be sentiments, right? So in the markets, quite often it happens so that it is not always 100% efficiently priced. There are mispricings happening, and behavioral biases and sentiments are a huge reason for it. Like today, if you look at it, there are many opportunities available simply on account of the fact that there is a global risk of and FPIs are holding their money back, and that capital has not yet flowed in to the market. So prices are also at the end of the day a function of demand and supply. So because that capital is out and because sentiments are favoring certain segments over the other in the short term, it opens a lot many opportunities in the value and the contra segment. As an investor, if you have to choose between value and contra, I would say you need to understand the fact that the margin of safety is slightly higher in value investing because you're betting on companies that are trading at what you perceive as a value lower than its intrinsic value. So there is some more margin of safety. You going wrong chances are slightly lesser. I won't say very different. But in contrarian investing, you could be wrong totally. You could get it completely wrong. So quite often, it serves in best interest to not try and choose between the two. but allocate to both as a strategy. In fact, some very successful fund houses adopt a blended approach, where they have a little bit of value in their contra fund and a little bit of contra in their value fund to ensure that the risk is managed and performance is optimized.
Nirav, I love your take on both of these and the songs that you mentioned as well to make this dramatic. But like you said, Papa kehte hain bada naam karega, as well as apna time aayega, come with its own risks, right? You are taking a risk for sure, and even within the actively managed funds, of course, there's a risk in all actively managed funds. But you can argue that this is perhaps more risky than a usual bet, right? You want to take us through some of the risks associated with this kind of fund?
Absolutely. So, Pavitra, like you rightly said, the number one risk is, largely similar to that of actively managed funds. It is the systemic risk that markets carry. The second risk is the construct, the fund management style, etc., which is common across the board, for all equity funds, no different. I'd like to highlight risks that are very specific to, a value/contra strategy. So for a value fund, a very important risk lies in the statement that there is a thin line distinguishing a value opportunity from a value trap. It is quite possible that a fund manager, not necessarily, obviously not intentionally, but a fund manager takes a call believing something to be a value opportunity, but it turns out to be a value trap. In other words, the expectation is that this company will grow and the stock price will follow the fair value that it is supposed to get, which is higher. But there is an important piece of information that goes amiss, or another development that never lets this value reach the fair value that you have perceived. The gap continues to remain. In fact, there is also a possibility that the perceived fair value also drops below your purchase price because a development was not factored in. So that is an important risk to note while going for value investing. When you talk about contra investing, there is a very beautiful phrase that I remember and is very important for investors also to know, is that markets can remain irrational for longer than most investors can remain solvent. I'm not quoting it correctly, but it is on these same lines. So with contrarian investing, it is quite possible that you have taken a bet on something that is such a long shot that you need the money before your contrarian bet actually plays out. Right, so that's actually a fair probability that your view was so contrarian to everything that was happening, and the cycles, prolonged far beyond what you expected. So you may have to move out or churn the portfolio much before you realize the benefits of the contrarian bet, or that actually materializes. So these two are very pertinent risks and distinct to this style of funds.
All right, those are some important risks that you do need to keep in mind if you are venturing into this kind of fund and making this kind of bet. Nirav, it's been a very interesting chat, so I request you to please stay on. We do have to take a short break, but on the other side, we are going to talk about what the returns will look like if you have taken this kind of bet. If you're taking all of these risks, the money has to be good as well, right? We'll get you all of the details when we come back.
%100% happiness with SBI Home Loans. Zero processing fee at 8.50% onwards. Apply today. Call 1800112018. Visit homeloans.sbi.
Hey, कमाल की कार है ना? हमें ले लें क्या?
सर, कमाल की कार के लिए कमाल का पेट्रोल भी चाहिए, एकदम टॉप का, जो हमारे इंडिया में मिलता कहाँ है?
अरे सर, पर इंडियन ऑयल पे मिलता है। प्रीमियम कार्स के लिए इंडियन ऑयल ने बनाया है 100 ऑक्टेन वाला देश का सबसे प्रीमियम पेट्रोल, XP 100।
वाह, इंडियन ऑयल की बात ही कुछ और है।
इंडियन ऑयल, पहले इंडियन, फिर ऑयल।
The new Fiamma mint charcoal soap. Refreshing fun.
Hey, buddy. Hope you like them.
Introducing Apollo Alpha. Add more thrill to your beast.
Friends, I want to share some good news with all of you. Firstly, like always, we have performed very well this time also.
But what will we get?
Secondly, we shall invest in employee benefit.
Come on, now tell us what will we get?
And thirdly, we shall invest in LIC's group funded plans.
Great, we'll get everything.
Now, leave encashment.
Gratuity.
And along with pension, our future is secure.
Yes, employees' real benefit lies in LIC pension and group scheme.
Welcome back. You're still tuned into Mutual Fund Corner here on CNBC-TV18. We have been discussing value and contra funds, and we still have Nirav Karkera of Fisdom with us to talk all about this. Nirav, you've taken us through all of the risks, but talk money to me now. What have the past returns look like for this, say, versus the index? How has it looked, considering you're taking all of this risk? I'm just trying to assess, is it worth it or not?
I feel the returns, the past performance is definitely going to warrant the fact that this conversation has been totally worth it. Because if you look at it from a longer lens, right, over, let's say, a 5-year period, let's take two cases, right, 5 years versus 10 years. Over a 5-year sort of a period, most contra-focused funds have, performed pretty well. In fact, the category average could be pegged in the range of 11 to 12%. If you look at value-focused funds, the category average is slightly lower at 9%. But when you go towards a 10-year trailing performance, you will easily see that most of these funds converge at an average of 15% CAGR, which is amazing. I would say it is phenomenal, even bearing in mind the sort of inflation that we are witnessing right now and the expected returns that one should expect. I feel these trailing returns should be encouraging enough for investors to explore this in far more detail.
Oh, for sure. That definitely looks like, an enticing call to get into this category. But then tell me, Nirav, for example, an investor is confident of a long holding period. Okay, let's say 10 years for sure he's willing to hold. Is it a no-brainer then to get into this category and try to generate higher alpha? Do you think you should definitely have some position here? And then what % of your portfolio would you recommend allocating to this category?
Absolutely. So I feel one important thing that investors must know is that this is a very good product category to strategically allocate it to. Please do not view it just as a tactical bet. I know there are many people out there who would say there is a time when value performs, when growth performs, but at the heart of the matter is the fact that we do not know when that time is, right? And that's the reason we seek mutual fund assistance to help us through that journey. So one must strategically allocate towards value/contra funds. Another important thing that one must understand that while this is a play for alpha, while the performance clearly reflects that this fund generates amazing returns over the longer period in time if selected correctly, one must also understand that this is a very strategic, shock absorber also in your portfolio. By taking contrarian bets, you are taking exposure to sectors that are not in favor right now. Right. So when other sectors that are doing well right now, they start entering the down cycle, there is a fair probability that these sectors then start looking up. So this also balances your portfolio in a way and adds a very strong, cushioning element to your overall performance and a very strong risk adjustment layer to it. So one must invest into such funds from that perspective as well, that it is not just an alpha play, but also a very sound diversification and cushioning strategy. And for a moderate risk appetite sort of a person with a 10-year sort of a horizon, I feel 10 to 20% allocation could be a good starting point. Obviously, you can fine-tune it in line with what your investment objectives are.
All right, that makes it very helpful, and I'm sure that really breaks it down for all of our viewers. Just one final question, Nirav. In this case, we are betting on, of course, the fund manager is taking all of the risky bets for us, but what the investor is really doing is betting on the fund manager, right? Is that the most important parameter that an investor should study before getting into this kind of fund?
Absolutely. I would say evaluating the fund is as important or probably less important as compared to evaluating the fund manager and the fund management team that's running it, because this is an actively managed fund. Like if it would be any other sport, right? Before betting on a game, you got to bet on the player, right? And you got to know how the player is going to play on the day to have a fair sense of certainty on how the outcome of the match is going to look like. So you must absolutely understand the not just the fund manager, but also the entire fund management team in depth. It is important to analyze what is the track record of the fund manager, what is the style of the fund manager, how has the fund manager been able to navigate different market cycles? And for a retail investor, I know this may seem difficult कि हम कैसे करेंगे ये, but एक काफी straightforward सा एक तरीका है ये करने का. आप जब रिटर्न्स देखते हो तो उसे ट्रेलिंग रिटर्न्स के हिसाब से मत देखिएगा, उसे डिस्क्रीट पीरियड के हिसाब से देखिएगा. कि in certain let's say calendar year as a discrete period, right? In certain years the market performs in a certain way. During that tenure, how has this fund performed during that very specific period? That will reflect on how the fund manager takes his portfolio decisions and how does it actually turn out to be. You can also look at the current portfolio to make a sense of how the fund manager operates, how does the fund manager think. Quite often than not, if you visit AMC websites, mutual fund websites, these AMCs also share who their fund managers are and a whole lot more about their investment team, about their product team. So while it is important to know, how is the lead performer going to do, you must also understand how good is the, the tech support going to be during the concert. That defines the success of the performance, not just how well does a singer sing, but how well are the mics arranged and how well are the guitars maintained, right? So this will give you an overall view of how good fund managers are, and this should be the starting point for your evaluation.
Very, very helpful, Nirav. Thanks a lot for taking us through that complete masterclass on this category of funds, on value funds and contra funds. I'm sure it's benefited our viewers a great deal. But on that note, we're going to wind down. Thank you again for joining us. Remember, you can stay tuned because closing bell comes up after this very short break to take you through the last hour of trade.